These are things that you usually hear rumors about before they do happen. I do think that more rate cuts are coming as well. China's economy has shown cracks in the foundation and weakness from within. It also has a negative economic effect as well, because you need strong business activity, you need good consumer activity in order to keep the economy going. And what does China do in order to try to achieve that? They just dropped interest rates. Now, China's interest rate cuts seem to have surprised a lot of people. It came out of nowhere, it wasn't really expected, but when you think about it, it was a smart move by the country to do. China is facing surging debt, an ongoing property crisis, and weak consumer and business sentiment. Second quarter economic data did not come in as high as was expected. So what did China do in response to this? They just cut interest rates in order to boost the economy, to give it a shot in the arm. So why did China do this? Why did they make this surprising move? Why is this move even surprising to people? So before we get started, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. Now, China's economy is dynamic and robust. It is the second largest in the entire world. But China's economy has shown cracks in the foundation and weakness from within. Now, China is a world leader when it comes to exports. China's factories, they supply the world. But even there, they are facing growing competition from Vietnam and other countries across the world that want to get more of a market share in that market. China dominates there. But when it comes to consumer and business sentiment within the country, it is at a weak point. There is that ongoing property crisis that is going on, and China is spending a surging amount of money in order to keep things going, in order to keep the ship afloat. Now, if this sounds familiar to you and you feel like you've heard this before from other places, it's because you probably have. For example, the United States, they are facing surging debt levels. The United States also has a housing crisis, and housing prices are too high. And these are issues that not only China faces, other places across the world are facing similar issues. But one thing with China is when it comes to consumer spending, it is not as the people there, they just react differently. When things get hard, they pull back a lot harder than some other places. Whereas reports in the United States might come in, things are slowing down and employment is getting higher. But then when you see those consumer spending reports, people are still spending, even if they're going into debt, and it kind of keeps the economy going. The Chinese people, whether it's because they're smarter or because they just don't want to, they will pull back a lot quicker. But that also has a negative economic effect as well, because you need strong business activity, you need good consumer activity in order to keep the economy going. And what does China do in order to try to achieve that? They just dropped interest rates. Now, China's interest rate cuts seem to have surprised a lot of people. It came out of nowhere, it wasn't really expected, but when you think about it, it was a smart move by the country to do. It was the consumer and business activity domestically that needed a big boost. And by cutting interest rates, now a short-term rate was cut and also a benchmark lending rate. And when you think, a lot of big loans were coming due as well. You had, for a lot of big businesses, you are in a business cycle where a whole bunch of money is coming due for banks. So by changing rates right now, businesses will be able to get more favorable loans. They'll want to get more favorable loans. Makes it easier for lenders, for businesses. So I think that also played a big role into this. You have a lot of money that's coming due, and by lowering rates right before that happens, I think that it's a smart move. Now, a lot of people are surprised because China moved before the Federal Reserve decided to drop interest rates. But the thing is, China they wasn't doing this to try to react to somebody. They're not trying to, oh, you did this, so we're gonna do. No, they're trying to boost their own economy, do things from within. Remember, they had that meeting last week when it comes to that 5-year plan and what they want to achieve. Well, one of the ways to achieve that economic growth, you drop rates in the short term so you get people to spend more, and that just kind of gives the economy a shot in the arm. Now, I do think that more rate cuts are coming as well. As the Federal Reserve cuts rates, China will probably cut more rates as well. And they might do it before the Fed does. They might do, and the Fed, probably will do it in the fall. But we see here China doing it in July. Surprisingly, they might do it again before the Fed does it. But I think as the Fed enters that cycle of rate cuts, China will respond again with more rate cuts from them as well. Ultimately, it was a little bit of a surprising move. When I read it, I didn't really expect it to take place. These are things that you usually hear rumors about before they do happen, but China understanding where they are economically, deciding to cut short-term rates and a key benchmark rate for lending right now as a move to try to boost their economy. I think that it's a smart move, and we're going to see how this plays out for them. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.